Why everyone's selling gold for Australian dollars, the next global reserve currency. In the last 18 months, central banks have quietly dumped $47 billion in U.S. treasuries while stockpiling Australian dollars at rates not seen since the 1970s gold rush. If you got savings in USD, euros, or pounds, what I'm about to show you might make you question everything you thought you knew about safe money. First, let me show you something weird that's been happening in Dubai, Singapore, and London. Meet David Chun. He's 52, works as an investment banker in Hong Kong, and in 2023, he did something his colleagues thought was absolutely insane. He converted 40% of his portfolio from US dollars into Australian dollars. His peers laughed. They said he was paranoid. They said he was throwing money away. Fast forward to October 2024. David's up 23%. His colleagues, down 8%. And here's the thing, he's not alone. Between January 2024 and now, Australian dollar holdings by foreign investors jumped 67%. That's according to the Reserve Bank of Australia's Q3 2024 report. We're talking billions of dollars flooding into the Australian dollar, while smart money quietly tiptoes away from the greenback. But why? What do these wealthy investors know that you don't? Here's where it gets creepy. The last time we saw this kind of movement was right before the 2008 crash. Except back then, people were running to the dollar. It was a safe haven. The king, the unshakable giant. Now, they're running away from it. And toward what? The Australian dollar? That's just a commodity currency for a small economy, right? Wrong. Dead wrong. And here's why. Australia has something almost no other developed nation can claim, the resource fortress. Right now, Australia controls 46% of the world's lithium reserves, 30% of rare earth elements, and it sits on the third largest gold reserves on the planet. That's from the U.S. Geological Survey's 2024 report. While Europe and the United States are scrambling, literally begging, for EV battery materials, Australia owns a supply chain. They don't need to beg. They don't need to negotiate. They have what everyone else needs. Let me tell you about Sarah Okonkwo. She's 38, a businesswoman from Nigeria with a family mining investment portfolio. In 2023, she made a bold decision. She pulled her money out of South Africa and moved it into Western Australia. Her reason? I watched Chinese firms, American corporations, and Saudi conglomerates all bidding over market rate just to secure mining contracts in Australia, she told me. I knew that if everyone's fighting to get in, I need to be there first. Her stake increased 34% in just 14 months. But here's the thing that should absolutely terrify other currencies. Australia isn't just resource rich. It's debt light. Let's talk about the debt paradox. The U.S. debt to GDP ratio, 123%. Japan's, a staggering 264%. Australia, just 47%. Those numbers are from the IMF's World Economic Outlook 2024. Imagine 3 people walking into a bank to apply for a loan. One person owes double their annual income. Another owes almost triple. The third person owes less than half. Who do you think gets the loan? Who gets the best interest rate? Now apply that logic to currencies. Marcus Lindberg is 61. He's a pension fund manager from Sweden overseeing 890 million euros. In March 2024, he shifted 15% of his fund into Australian dollar-denominated bonds. Not stocks, not crypto, bonds. Boring, stable bonds. His reason? The risk-adjusted return made every other developed currency look like a gamble, he said. We're getting 5.2% yield versus 4.1% on U.S. Treasuries with less default risk. Think about your savings for a second. Would you rather bet on a country drowning in debt and printing money to stay afloat, or one that's financially stable, resource-rich, and doesn't need to play games? But the real kicker? It's not just about what Australia has. It's about who they're friends with. Australia sits smack in the middle of the fastest growing economic region on Earth, Asia Pacific. By 2030, this region will account for 50% of global GDP. That's according to the Asian Development Bank's 2024 projections. China, Japan, South Korea, India. Australia's top 4 trade partners represent 3.2 billion people. That's not a market. That's a universe. Priya Kapoor is 44. She's an Indian tech entrepreneur who expanded her AI startup to Sydney in 2024. She made one small change that altered her entire financial trajectory. She started invoicing her clients in Australian dollars instead of US dollars. Every single month the US dollar weakened against the AUD. I saved 2 to 3% on currency conversions, she said. Over a year? That's enough to hire another full-time employee. And here's what almost no one realizes. While America is locked in a trade war with China and Europe is wobbling under its own weight, Australia's been playing both sides perfectly. They trade with China. They're allied with the U.S. They're neutral enough to work with everyone and powerful enough that everyone wants to work with them. So if all of this is so obvious, why isn't your financial advisor telling you about it? Let me show you something that should make your stomach turn. In August 2024, a leaked internal memo from Goldman Sachs made its way onto a private investment forum. In it, private wealth advisors were quietly told to explore diversification into non-traditional reserve currencies with commodity backing. That's banker speak. Let me translate. Get your clients into Australian dollars without causing a panic. Why would they say that? Why the secrecy? Because when big institutions move, they don't announce it. They glide quietly under the radar. And by the time you hear about it on the news, it's too late. Meet Elena Volkov. She's 67, a retired Russian expat living in Cyprus. In 2022, she lost 40% of her ruble savings when sanctions hit. It was devastating. Everything she'd worked for, gone. Her wealth manager called her in early 2024. He said, "Elena, I can't tell you exactly what's happening, but the world is preparing for something. We need to get ahead of it." He moved her money into Australian dollars, Canadian dollars, and Swiss francs. She didn't ask questions. She trusted him. Today, she's up 19% year over year. While her friends are still scrambling to recover, Elena's retired comfortably. Now look at the data. Between Q1 2024 and Q3 2024, Australian dollar reserves held by global central banks increased by $23 billion. That's a 34% jump in just 9 months. That's from the IMF's COFR data released in September 2024. Central banks don't do anything without a reason. They don't gamble. They don't speculate. They position. Now, I'm not saying there's some shadowy coordinated plan to replace the US dollar. I'm not a conspiracy theorist. But when you see this many billionaires, fund managers, and central banks doing the exact same thing at the exact same time, you'd be a fool to ignore it. Ask yourself this. If you knew a store was going out of business, would you keep using their gift cards? Or would you cash them in while you still can? But wait, there's a problem. And it's huge. Let's talk about the risks. Because if I just hyped up the Australian dollar without showing you the dangers, I'd be doing you a disservice. Risk number 1, the China dependency trap. 31% of Australia's exports go to China. That's from the Australian Bureau of Statistics, 2024. If that relationship sours, if China decides to punish Australia politically or economically, the Australian dollar could nosedive overnight. Let me introduce you to James Thornton. He's 58, a sheep farmer in Queensland, Australia. In 2020, China banned Australian barley, then wine, then coal. Political retaliation. James's income dropped 55% in 8 months. The Australian dollar took a beating. "I thought I was safe," he said. "I wasn't." The trades eventually resumed in 2023, and James recovered. But the lesson? If you're thinking of going all in on the Australian dollar, that's a mistake. Diversification is still king. Risk number 2, the size problem. Australia's economy is worth $1.7 trillion. The U.S. economy? $27 trillion. Can a minnow really replace a whale? History says maybe. The British pound was the reserve currency for over 200 years. It funded empires. It dominated global trade. It was untouchable. Until it wasn't. It took just 30 years after World War I for the pound to collapse as a world's reserve. 30 years. One generation. But here's the thing. Reserve currencies don't need to be replaced entirely. They just need to be shared. We might not be heading toward an Australian dollar world. We might be heading toward a multi-currency world. And Australia's got a seat at that table. Risk number 3. The climate wildcard. Australia is one of the most climate-vulnerable developed nations on Earth. The wildfires in 2019 to 2020 alone cost $4.4 billion, according to the Australian National University's 2021 report. If droughts worsen, mining operations slow down, agriculture tanks, the very commodity backing that makes the AUD attractive starts to weaken. Amara Nwosu is a 41-year-old climate economist from Lagos. She studies currency resilience models for a living. Any currency tied to physical resources is vulnerable to environmental shocks, she told me. It's a double-edged sword. Resources give you strength until the environment takes them away. This is exactly why you never put all your eggs in one basket. Not in the US dollar. Not in the Australian dollar. Not in gold. Not anywhere. So, should you actually do anything with this information? Let me be crystal clear. I am not telling you to wake up tomorrow and dump all your dollars. That would be insane. But if you're sitting on 100% US dollars, 100% euros, or 100% of any single currency, you might want to rethink that. Consider allocating 10 to 15% into the Australian dollar or other commodity-backed currencies. You can do this easily through currency ETFs, like FXA, the Invesco Currency Shares Australian Dollar Trust. Or you can open a foreign currency savings account through most major banks. Let me tell you about Tom Kowalski. He's 49, a high school teacher in Chicago. Not rich, not a finance guy, just a normal dude trying to protect his future. In 2023, he attended a financial workshop on currency diversification. He didn't understand half of it, but one thing stuck. Don't put all your trust in one government. So he moved 12% of his retirement savings into a multi-currency fund. Australian dollars, Swiss francs, a bit of gold. I sleep better now, Tom said. I'm not 100% dependent on one government's decisions anymore. If you're a business owner who invoices internationally, here's another move. Start asking to be paid in Australian dollars or other strong currencies. It's that simple. Negotiate it into your contracts. For investors, look at Australian REITs, mining stocks, or infrastructure projects denominated in AUD. You're not just betting on a currency. You're betting on tangible, physical assets. And here's the kicker. A 2024 Vanguard study found that portfolios with 15 to 20% foreign currency exposure had 22% less volatility during market downturns. You don't need to be a financial genius to do this. You just need to be awake. So here's my question for you. If your gut is telling you the financial world is shifting, are you going to ignore it and hope for the best? Or are you going to make one small move today to protect what you worked for? Drop a comment and tell me, what percentage of your savings is in US dollars or your home currency right now? And would you even consider moving 5% into something like the Australian dollar? I'll be reading every single response. I want to know what you're thinking. The financial world is changing. The question is, will you change with it?